everyone. Welcome to the Trading Market Technicals morning call video for Friday, September the 6th. Market ended up pausing for the day, waiting on the non-farm payroll report, although all of the indices did close green. Dow Jones up 6, Nasdaq up 9, S&P up 2, and the Russell up 3. Market sold off a little bit into the opening and then pretty much based pretty much most of the day. Down bouncing between gains and losses, but although we did close positive, we really closed flat, and that is waiting for the non-farm payroll reports that are due out today at 8:30. Now, this is a big number. If the non-farm payroll reports come out strong, the markets will probably sell off based on that number, because that is just additional fire for the Fed to start its tapering policy. So that's something that I'm going to be watching today. Now, this would usually set the trend for the month, so let's keep that in mind. We are into a seasonal time of weakness. That usually ends somewhere around the second week of October. It doesn't have to happen, but if history does repeat itself, we should be seeing additional weakness in the markets. Now, we are in a short-term downtrend. You keep that in mind. If you're looking to buy stocks, and if you are trading, I would be looking for strength intraday, and if you are a longer-term position trader or swing trader, I'd be looking for stocks that are breaking out, and preferably in the Nasdaq, because the Nasdaq stocks are the strongest right now out of the 5 indices that we follow. Now, there's not much. I'm not going to show you a lot of indicators, because there's really not much to show you. But I want to show you is the dollar, and if you haven't seen the video, the morning call video, please go to the website, www.tradingmarkettechnicals.com, and click on Tuesday's morning call video. And I did an extensive research video on the Forex markets as well. And they're hinting some sort of a breakout. Now, why? And I think that the dollar is truly ready to break out, and I mentioned why in the video, so please check that out. We have a nice big engulfing candle here. Now, 82.78 is the high for the week. If we could take that out on a closing basis, I think you're going to get a good shot run right up to here, to this gap opening area of resistance, and then of course this other gap area, but then ultimately up in this area. Now, what is that going to do? Well, right now we have an inverse correlated relationship between equities, commodities, and of course the US dollar. So if the dollar does run, I think you're going to have pressure on commodities, which we've already seen. I'm going to get into that as well. Gold and oil, obviously oil, with what's going on with Syria, it has been well bid up. We have that premium built into that, and of course you have that fear trade where people rush to the metals. Now, if that's the case, that's one thing, but right now we had weakness in gold, which I pointed out early in the week. The problem was it didn't hit our target where we would like to get short. The target area to get short, it just started to roll again. So you had to be quick with that, but you'll see what I'm talking about when we get into the videos. So the dollar I like, and I do like for strength, and I do like a euro short. On the next pullback on the dollar, if you're looking to play the dollar, you could play the euro short, or obviously just go right to the currency and look to play dollar yen strength, or the euro dollar short. Or you could even just get into an ETF if you can, which would be the UUP, but it doesn't really move that much. Or you can short the FXE, which is the Euro ETF as well. Okay, so let's take a look at the VIX. And as you can see, the VIX came right back in again. We closed outside the Bollinger Band. We came in and, of course, gave a buy signal to equities. Now, we are coming into a confluence area of support here, which is interesting to see if what happens today. I also think that today is going to be interesting. Now, today, a lot of guys are not looking to don't look to trade it, because it gets a little bit whippy. Wait till after the market opens, let the market settle, and let's see where we are going to be headed here as far as the direction. Let the market pick the direction for us, and then we'll just jump on the bandwagon. But this is interesting here. So let's see if we can get back down to this area, and then maybe one more blast up. I'm still looking. Now, again, this is just conversation. I'm still looking for a pullback in the market one more kind of a scary pullback. We're down about 3-4% off the highs, and I'd love to see an 8 or 10% correction. We haven't had that in a long time. If we can really just get back down to these, maybe even the June 24th lows, which I'll show you on the chart segment, that would be enticing to really come in and start building positions going into the end of the year. Okay, so that's interesting developments. And remember, Congress has approved a serious strike. So when that does happen, the knee-jerk reaction is going to be, sell the market. Now, it's going to be short-lived, so I do think the markets will recover right away. And that's going to be a buying opportunity. Remember that, okay, when that does happen. All right, take a look at the CBOE put-call ratio. Closed bullish, closed at 82. Back into this range here. As you can see, we had a little fear creeping in, and then markets just literally dropped, and then right back into this range again. So keep an eye on the VIX and the CBOE, and that'll give you some clues that if we're coming into some have some fear coming into the markets. Okay, USO. I love the oil trade, but I don't like it up in these areas. And as you can see here, we filled the gap. We fill this gap here, and this is that gap area of resistance, and we're holding it in here. Now, I'd love to see this market pull back into this 37. 36 to 36 and a half is really my buy-in. Very easy to manage. You know that if the price breaks below this area here, below, let's just call it 36, you know you're wrong. But up in these areas here, this market, as you know, crude can blast right off if something does happen. And I would not be a short seller in crude at all because of what's going on. I'd rather be a better buyer in pullbacks. If it doesn't happen, so be it, let it go. But I do like this lower. I like to buy it lower right up in this area here. And if you're looking at WTI crude, 102 to 100, right in that par area in between is really the sweet zone to be buying crude oil. Now, we have GLD here. GLD hit this area right to the penny and sold off. I was looking for here a little push higher into that 139, 140 area, which I would love to have love to have shorted GLD. This would have been the target area right underneath the 200-day moving average. First touch always usually sells off. That did not happen. Markets just sold off. Gold just literally just fell out of bed. So that 1416 area, that 1416 or 1424-ish is a valid area, and that really held true. And I've been kind of talking about that for the last couple of weeks. Unfortunately, with the metals, you have to be quick sometimes, and I'm not really looking to do that. I like to let price start to roll over, close, but what happens is sometimes with the metals, especially gold, they usually gap lower or gap higher, and that's why I wanted to be especially sure that that the short setup is actually valid. Okay, so now let's go into the EEM. I said to you that I'm looking to short up in these areas. So this is a perfect example why you need a trigger. Now, I liked the EEM here right up in this area here. We had a little bit of a cluster zone from the high-low Fibonacci here to the high-low from here to here. And what happened? It blew right through it on a closing basis. Do I want to short this? Absolutely not. We have two engulfing candles. The EEM buying looks like it's starting to come in. We did have some strong China numbers come out over the weekend and a couple nights ago, so this is fuel for a little bit of risk-on appetite. So I'm not looking to short this up here. If the market came back up into this area here, this double top area, would I short it? I would look to short it if it gave me a right setup, meaning that we roll back over and the market took out the previous day's low. Now we still have some bearish symmetry, right? Lower high, lower high, lower high, lower high, but we're really now starting to break out of it. If we start to take this area out of 4022, it would need a little bit more work to break down again. So right now the short sale on the EM is off the table. I'm not looking to short it, but if it starts to break back down again and takes out yesterday's low, then the market is back in correction, then I would definitely look to short it. But remember, this is a perfect example. Just because price is where you want to short it, you need the setup, and the setup isn't there right now. Okay, so let's go right into the indicator, our chart segment. As you can see here, the markets are making lower highs and lower lows. We are in this downtrend channel, and I would not be looking to really looking to buy the market here. But however, we are rolling up in our indicators, our MACD stochastics momentum indicators are starting to break higher, break 20, and our MACD, we're not quite there as the signal line, but it is a good sign. Now, what happens usually is that we could just roll right back and die. So this is why the market needs to prove itself. And today, and you'll see all of this little area here, you'll see doji candles, spinning tops on all of the indices that we follow because the market didn't go anywhere. They're waiting on the non-farm payroll report. So this is going to be good for next week and the next 3 weeks of September to start really get your game plan on for the week. That's why I said be nimble. If you have to trade or you see a great setup, fine. If you don't see anything, just take a step back and wait for the opportunity to arise because you want your palate dry so when the market does either run back up or start to sell off, you're not caught in a bad position that you need to manage. And that's why I'm ready to go with this with the way the market is anticipating a non-farm payroll report. Then that's when I'm going to be jumping on opportunity. Okay, diamonds, Dow Jones ETF. As you can see, bear flag, another bear flag. So what we want to see is either we break out of the bear flag or we look to break back down again and the 200-day moving average. I like to see the markets get down to around the 200-day moving average. By that time, when that happens, you're going to hit the June 24th low, which would coincide nicely with the 200-day moving average right here in green. If that does happen, I will be looking to nibble long in the market. And here is the IWM, same thing. We have a longer-term uptrend. This is from the November 2012 lows. We are still in here with the IWM. So Russell's been holding in quite nicely, but still another bear flag here. The longer-term charts, as far as the weeklies, are actually holding up nice. So this is same thing. As you can see, MACD hasn't quite crossed over yet. Stochastics has. We have very light volume to be expected. This is the last week. We also have the Jewish holidays, Rosh Hashanah and Yom Kippur. So that is going to give us a little bit of light volume. Back to the charts in here, you'll see lower high, lower high, lower high, lower high. We are clearly in a downtrend. So we need to either break that bearish symmetry and start to roll back up again, or let's break down one more time, flush out the weak longs, and then start looking to buy the market. Here's the transports. Transports did okay yesterday, but still stuck in this the 20 and the 50-day moving average. We're below the 8, but we also are above the 200. So if we start to break down here, guys, we could flush a little bit lower, and the target would be obviously the 200-day moving average, and then of course the 2000 and the June 24th lows here. So keep an eye on these sectors here. Head and shoulders in the SMHs, that actually hit our target here for the trend line. I'll be taking that off. Matter of fact, I can do that right now. Now we want to look for either a test back up in here of resistance and fail, or the SMHs break out. This is a good sign, though, that the semiconductors are starting to rally. They were very, very weak as far as the networking sector as well. The IGN ETF also had a great short trade, and that rolled over as well. Now, starting to pick up a little bit of steam here. Let's see if this is for real. If we get a little bit of a back test into this area, or even double test this long-term uptrend line, this would be making a higher low off of this pivotal low. Then I think the semiconductors can really get a good shot to rally going into the end of the year. Here is here's Goldman Sachs. Now Goldman's the banks are really not really participating. That's interesting. I really like to see the banks participate with tech if the market's going to rally. But right now, as you can see, we are still in a downtrend. Lower high, lower high, lower high, lower high, and this is actually a bear flag here going into the 50 and the 20-day moving average. A lot of overhead resistance. I'd be looking to stay away from Goldman. Goldman needs to break the bearish symmetry as well. Chop around here for a day or two and then start to break higher before I look to buy Goldman. XLF, just telling you the same story. Below the 50, below the 20, bear flag here. Needs a lot of work to do. We did fill the gap here right to the penny, as you can see, from the red bar and to the doji, but it still needs a lot of work before I'd be looking to buy any banks. Here's Apple. Apple here, holding up nice. Again, guys, we're stuck in this range, 485, let's call it, to 504. We need to either break out or break down below it to get movement in Apple again. Now, the longer it holds up in these areas, the more fuel it's going to get to break to the upside. But if something does happen, remember, Apple can go either way here. So to me, this is just kind of dead money at the moment. I still see Apple selling off one more time, and then that would be probably a buy-in going into the end of the year. And lastly is the Qs. As you can see here, Qs really didn't do much of anything. Again, we have little spinning tops, little dojis on all of the indices that we follow. Markets really didn't do nothing, waiting on the anticipated non-farm payrolls that are coming out at 8:30 today. So use caution. Let the market open. Give it at least a 15-minute rule. Let the markets digest which way it wants to go. Markets could just sell on the news as well, and then bid up the market again going forward. So this could be priced in. We're not sure. So let's see what happens with this non-farm payroll report at 8:30. Keep an eye on. Keep a good heads up. Remember, it is Friday. It's the first week back from the summer. So aside from the non-farm payrolls report, market should kind of be ending up slowing down going towards the end of the day today. But get ready for next week. Get your game plan ready. Get your stocks ready. Keep an eye on what's going on, because the next 3 weeks and going into the end of the year, it's going to be an exciting 3 months, because there's going to be a lot of volatility picking up, and I can see that already in the markets. Have a great day. Enjoy the long weekend, and I will speak to you on Monday.